So this is a test with a short introduction, and we will move on into a PowerPoint presentation. And so that begins now. And as we move into this presentation, you'll see that we have the very first slide with the title of it, The Value of the Right Tools. And so there would be a brief discussion here, taking the guesswork and hopium out. It's not for the faint of heart. So, et cetera, et cetera. I'm just going to read here so that I can get some timing down. The degree of information you need, the ability to both time a trade and limit risk, rule-based trading plan, finding a mentor. So you'll need to turn off your email and all your promotions and turn off the TV and trade with a qualified mentor every day from 8 to 10:30. So this takes us to talking about the using just a price only and taking your chances. On to the next slide. On to the next slide, the title, Bullish and Bearish Zones. Then a complete picture, or almost. And here we have another chart. And then for additional information, fibs, channels. Again, I'm just reading the slide here for the test. Prior day highs and lows, support and resistance yesterday, supply and demand historically. And then finally, the value of the right training. And so we move on then. So then we move on to showing a short video, and that is next, and I will be right back.
Well, I'll be going to do a little assessment on the Trade Lab. Good.
Yeah, very good. Let me turn over the screen to you, and it's all yours.
All right, awesome. So here's the results from today's Trade Lab. Pretty quiet session today for the results. We were in conflict since, well, basically out of the gate. There's 8 o'clock. You can see that today we've got the treasuries. Let me just put this in line. So we got the treasuries on the right, stocks on the left, and the problem with this picture is that we have both of these benchmarks moving in the same direction. Both starting off in the bull territory. So with that being said, nothing to really do today in the stocks. Here's the 4 stocks as a whole. Pretty choppy. You can see everything kind of started in the middle of the zone. We had a pretty sharp pullback near the open of the stock market session back to the neutral. The Russell did take off. It was the actual leader. And it broke out right about, I guess it was the stock market open, and went up and tested the resistance. But getting long in the stock market with the treasuries being in the bull territory, that keeps us out. We recognize that as being a conflict situation, and that basically keeps me out of those markets. So we identified other opportunities, or at least trying to look for other opportunities in some of the other markets. And the only one today really that is set up is the soybean trade. It's a market that we identify as an independent, and I had a breakdown happen in the last half hour. You can see the 7 channel that's in line with the bear level, the bottom grain, and it took it out. It's kind of slowed down a little bit. Now the corn is the leading grain market on the way down, so we're kind of waiting to see if corn's going to pick the pace back up and soybeans will follow. Wheat has already taken out critical support, so more or less getting all the grains in the same direction here this morning. So that's really the only trade that we've done here. We were also looking at crude oil earlier. Let me put this on a smaller time frame. And from 8 o'clock being identified by this bar way over here to the left. Again, another market that we like to trade when we are in a risk-on situation if the stock market's going up, and that has not been the case. So if you really think about it, since a majority of the session here, more or less sideways in the middle in between our bull level down here, the green, and the first level of resistance, never tested it. There was a breakout earlier, so you had to be an early bird to really catch any kind of a breakout. I'm not a big fan of the location of that breakout. The channel is actually resided inside of what we call a neutral zone. So really net, slim number of trades today, which in my book is a good thing, especially that being a Friday and having really not any reports to get the markets moving today. Of course, the biggest moves were yesterday. So after our marathon moves that we've had, kind of a quiet session today, this Friday, the 18th of October. And that is your report for the Trade Lab. See you guys Monday.
And so we are back, and we have just seen a short video on trading for the day. I believe that's the one I played. And so we're off to see the next short video, and we'll catch you as soon as that's over.
I paraphrase. The purpose of the Trade Lab and IQ Room and all workshops is strictly for educational and instructional purposes. It's not a trading advisory service of any kind. It shouldn't be construed as such. Past results are not necessarily indicative of future results. Now, I know that everybody has seen this slide, but I want you to think now, not as somebody that's just joined us, but really think about what you are accomplishing with RiosQuant. Either accomplishing from the standpoint of exponentially growing your profits or evolving into a more efficient trader. And it's all contingent upon this information age that we all live in, but what we quant traders rely on now. And it is a high-tech global economy, but I think that RiosQuant has adapted. Joe Rios, with his wisdom and over the years, have built, I think, a trading methodology, a system with indicators that tie three very important elements together, really address this think-based approach for the new age of the financial markets, which is taking place as we speak, because markets volatility is going to start ramping up if it's not volatile already. So what we think we have as quants are tools for a new age. This is a quant-based technology that we run, right from the macro technical, where we're doing quant rankings, all the way down to the micro technical, where we're doing ratings with 5, 3, 1 accelerators. It's all quantitative. And being a quant in the new age, and what we're doing is, I think, very revolutionary to the retail trader. Everybody that comes in touch with this, whether they buy into the membership or not, sees this as something that is of high and genuine difference and unique, because what we're doing is a systemic implementation of trading strategies. We look at the trading environment. We understand now with ArcuTech, we understand where the market is trailing to, where the flow is going. We can identify where that market momentum is. And as long as we can stay disciplined to that methodological and automated approach, we're going to make the best selections we possibly can. It's when you see the 1 hour red and the middle hour unchanged and the 8 hour red, and you see a setup, then what? Do you take the setup, a Gnostic or a breakout trade, as an Arcu channel, or do you sit and you wait and you scan for other things that are all bullish aggressive accumulation or bearish distribution? Ask yourself, are there times you just jump the gun? Well, the system that Joe put together with these three elements is going to mitigate pitfalls that will often plague the discretionary trader, where maybe he's just trading the E-mini S&P and he doesn't have anywhere else to learn and go from, or focus his attention to, or her attention. That means trading decisions are vulnerable to emotional or indiscipline, greed and fear. When we wake up every morning with greed, and we end up either feeling the fear or we're not. Usually fear, always fear is a projection, is not a fact, and fear is ordinarily generated by over-leveraging, having too much in the market, and subconsciously you know it. So you start moving, or the retail trader starts moving around his stops because he just doesn't want to feel getting stopped out. And that feeling It's nothing but a projection because he's not stopped out yet. So what he does, or she does, or I've done in the past, is I move up the stop because, oh, the market is going up a little bit, so I think I'm going to move up the stop before I should, place it where I shouldn't. The next thing I know, the market comes down a little bit toward me, then I start moving the stop down. Does that sound at all familiar in the past? Well, that movement is fear-based psychology that's built by the subconscious feeling that you're over-leveraged. Now you go to the quant ranking and you know that you're taking 1 or 2% risk against your own capital in your own account, and it's all relative to everybody else. So we want to live by the mantra that simple math comes and we find simple solutions. And every morning we make sense of the numbers, so that psychological aspect is not grabbing us. It's not creating that fear-based behavior. It allows us to be proactive, and it allows us to set expectations. And that is key behind everything we do, is having a realistic expectation and being able to pinpoint where our setups are, contingent on our market selection now, knowing where the momentum is, so we can have the most confident decision and execution following it as possible. So you know where this all starts. It starts by knowing what's really going on. What is the trading environment? And we know this trading environment over the last 4 to 6 weeks has not been easy. What appeared to be risk on, okay, lasts a very short period of time. What appeared to be risk off would last longer than you thought. When it was risk on, the dollar was either up or it wasn't down. There was very strong push and pull cross waves hitting the market between Syria, which I mentioned earlier, and now we've got Washington, so you have these cross geopolitical and economic challenges that the whole world is facing. Let's face it, everybody in the world, every country in the world is watching us. Either watching us and what we're going to do with Syria, were we going to lob bombs? Russia then gets involved. Why did Russia get involved? All these questions, and then the next thing you know, poof, and it's pushed to the side, up on a shelf, and now we're dealing with Washington's dysfunction here domestically. So what's really going on? We need to know where the momentum is moving. Where is the shift? Where's the money rotating to? Where's the circulation? I think we know who's in control. It's the institutional money. And I think if you've been in my webinars, I always go through this every time because it juices me up. Why? Because we need to be reminded every day that we're not in control. The institutions are in control. The hedge funds are in control. They're moving the money. But what we have is a tool now in RiosQuant that absolutely is a game changer, as I mentioned in the email and the title of this webinar. So now the question is, how can you profit? And it all starts with the top 5 checklists, which I'm going to, at this point, turn over to Ken. And it'll be very easy. I'm going to hand over the screen to him. He's going to take over from here and run through the 5 rules in this checklist. There you are, Ken, and you're up and live. You're good.
Thanks, Steve. You can see me okay?
Yes.
Hello, everybody. I can't see who's here. For some reason, I don't have access to that part, but thanks for joining in. And, Steve talked about the RiosQuant, which is why we're all here, and a change in the RiosQuant, the way that we're going to market RiosQuant. So we'll touch on that here in a little bit. Much of this, many of you already know. We have some highly experienced traders in our group that use these tools on a consistent basis. So for some of you folks, it's going to be the refresher is not necessary. But for some of the newer people, some of the reminders that are going to come out of here will certainly play a role and help to solidify the RiosQuant trading, the methodology that we follow. And we start out with the macro view. I think everybody is pretty much aware of what the macro view looks like. Oops, there. The cross box. Crossbox gives us the macro view. It's had a recent change in that Joe now identifies upside and downside rather than leaders and laggards, which is in my mind, is a significant improvement, simply because it brings us to our radar, our trading radar through the day, opportunities that potentially have been identified already for us, markets that or instruments that have movement potential that Joe helps us to define or has defined for us, allowing us to be able to view particular markets looking for upside moves or downside moves. Pretty handy. And as we know, and I'm not going to dwell on this, we know what the red, the green, and the yellows mean. This is the long-term trend, as defined by the quant ranking in the crossbox, tells us or gives us a guideline by which we can manage our risk. Red and green, depending upon which system you're trading. The Gnostic has the 5 rules of engagement. Everybody's familiar with that. EP is always stressing that, allowing us to, when everything is fulfilled and it's a trend following opportunity, to put 2% of our trading capital at risk, and then yellow always being a 1%, counter trend always being 1%, zone 2 trades always being 1%. There's a lot of deeper nuances that take place when we start to talk about the information that the quant ranking gives to us and how we utilize it when we trade. Okay, let's go back to the PowerPoint. The RQTech defines or gives us or helps us to understand or follow the RiosQuant trading methodology. It helps us identify what the current view is in the marketplace. Where's the money flow? Are we risk on? Are we risk off? All terms that everybody in this session identifies with and understands. We want to know where that money flow is because it helps us to determine which types of instruments are we interested in going long or going short with. Next of class, the next stream for leaders and laggards, allowing us to identify those that are outperforming, instruments, and the instruments that are underperforming, the leaders and the laggards, within each individual category within the RQTech. Trade ranges, the navigator, giving us alerts that sometimes are somewhat annoying, but alerts anyway. And those alerts, when we pay attention to them, help us to identify when we're experiencing a channel break, helping us to be able to marry together all of the other portions, the upside, the downside information that Joe has posted. We experience a breakout or a breakdown, it's identified in the alert system. Is there an opportunity there? And then where's the risk, where's the potential, and how big should I go? I'm going to actually bring my RQTech up. And one of the things that is interesting about all of us at RiosQuant is we each have our style of being able to build the RQTech. Now, when we talk about market sentiment, we're looking at the DMS. Everyone identifies what's happening over here in this column. We are in risk on, and Steve also shared when he said risk on has been in short bursts. Well, that's been the case over the last few hours. We've gone from risk on to mixed to risk off to mixed to risk on. It's just this whole thing is rotating. But this helps us to identify which instruments we're interested in trading when we're in a given market sentiment condition without having to go to the charts and verify or look. Then we go to the next stream. The next stream helps us to understand what's transpired at 7 o'clock in the morning when we're doing our our analysis in the morning, we can look at the next stream 8 hour and identify which instruments were leading and which ones were lagging during the overnight session. Once we have an understanding of that, we'll flip over to the 3 hour, and you can see that they sort low to high, high to low within each individual category, asset class category. The 3 hour gives us identification of that time frame between actually all time frames is when we're going to be looking at the 3 hour view and validating or once, particularly when the market opens, going to the 1 hour when there is a lot of volatility and a lot of price action movement. So the 1 hour we'll be using for the 9:30 to 10 to 10 o'clock time frame, and then going back to the 3 hour. Viewing, looking for the aggressive accumulation, aggressive distribution, depending upon what's happening with the DMS, what it's telling us. And then the navigator. The navigator identifying whether or not we've broken the channel. Have we broken the channel, the RQ7 to the upside, defined as a positive green 1, or the downside defined as a negative red 1? Or are we range bound, defined by the zeros, still in between the channels? And one of the coolest things that I happen to like an awful lot is not having to look at a chart to understand which trade zone we're in to see what the opportunity looks like. There's often times when I'll look at something and I'll sit there and say, oh, look at that, the Swiss franc is doing something interesting. Oh no, it's at S3. It's not tradable. I'm not interested in going to look at the chart. So there's some great data or information that is at my fingertips, allowing me to make good decisions when I follow the whole methodology that Joe has built for us. All right. Back to the PowerPoint. So the metrics, the market environment, again, market sentiment, market environment. Risk on, risk off, mixed markets are in conflict. Once we identify that, we're going to then go to the correlating markets that apply to that market sentiment. We'll look at the financials, the commodities, the Forex, and select those instruments that correspond to the money flow. Once we look at the instruments, we're going to look for leaders and laggards, see what's outperforming, what's underperforming, before we go over to the alpha signal, momentum being the RQ channel, trend being Gnostic, automated being Einstein. You folks are all familiar with all of this. And then this is the analytical process. This is a snapshot of what the process looks like. We are overall making a market assessment, and it starts by understanding market sentiment, going to market selection, again with market correlation, applying proper money management that's driven from one of two places, either the RQ wizard or the crossbox, executing a trade, monitoring. Pretty straightforward, somewhat simple process. Has some moving parts to it, but once you get your arms around it, it's pretty nice to use. And the RQ tech has really helped us by having everything in one view. So what's really going on? Defined by the DMS, or the dynamic market sentiment. Who is in control? Defined by next stream, the velocity indicator. How can I profit? Defined by the RQ navigator, showing trading opportunities in the alert system, as well as showing instruments that have already broken the channel. Interesting little blurb from the CME. The concept of risk on, risk off trading has won increasing interest in popularity in recent years. There are, of course, many ways to construct transactions that are sensitive to these macroeconomic conditions. I spent a fair amount of time with Joe. Joe has believed in risk on, risk off, or identifying money flow and then narrowing it down to market correlation, etc. This whole process has been in his forefront for years. He was brought up with this stuff and has developed tools for us to be able to identify all of these different components as it relates to risk on, risk off. And then I think everybody has seen this particular shot down here on the right-hand corner. That's the interesting part. This is where we want to be. We want to be on the front of this train. We want to be on the front of the train that's either going fast up or fast down. We want to be part of this group. We want to be on the coattails of the institutional traders. They are the ones that are defining what the money flow looks like. They're the ones that are telling us which instruments are available for us to look for opportunity in, depending upon the money flow. All of you understand all of this. But when you break it down and look at it in its simplest form, the Architect is the tool that allows us access to all of this information in one place. All right, so we have aggressive accumulation. We're on a 30-minute chart corresponding to everything that takes place within the Architect. The Architect is driven from 30-minute time frame. There was a trade that was identified as aggressive accumulation. We're risk on, actually going into transition risk on. Trade zones in R1, everything is aligned for us. The Dow is leading the pack to the upside. Trade was executed. This is the same trade on a 5-minute chart. Had we rotated to the 5-minute chart a little bit earlier, we could have had an earlier entry. But obviously a successful trade. All driven from information that was derived from the Architect. Aggressive distribution. We're in conflict. Allowing us to look at the independents or the wild cards. Soy is red in all 3 time frames. The channel has been broken with respect to here, but the channel was actually, this is a description of a Gnostic trade. So the channel is not even displayed here. But the Gnostic trade, we're getting a 5 indicator there with a risk to reward that works. Executing the trade. When you're near the Gnostic levels, sometimes the Gnostic trading system or the Gnostic indicator is the right one to be using. If you need some more help with identifying which trading method or which trading alpha model to be using at which time, reach out to Steve or myself and we'll help you with it. Here's soy. That's where the entry point was, taking profit. Again, identified and driven by the Architect. It identified that there was aggressive distribution taking place. Now we got some more accumulation, this time in the currency pairs. You can see that the Architect here is set up somewhat differently than the way I create mine. I separate out the currency futures from the currency pairs. It's a matter of style. But we've got the euro yen and the euro dollar, both showing opportunity. All green going across. Risk on environment, both in R2. When we're in R2, what do? We reduce our risk. Here's a euro dollar on a 5-minute chart. Executed on the break of the channel. Taking profit right there. The euro yen on a 5-minute chart, same thing. Execution. Taking profit in the same 5-minute bar. Those are sweet. That's when you sit there and say, you know, kind of puff your chest out and say, ooh, I think I know what I'm doing. It's a good feeling. Even though the emotional part's not supposed to be in it. It's okay to pat yourself on the back. All right, I'm going to hand it back to Steve, and he's going to pick up right here. Change presenter. Mr. Schwartz, you're back on, my friend. There you go.
All right, I'm back. Thanks very much, Ken.
All right.
Great stuff.
No problem.
Well, I want to go over
Okay.
yeah. Terrific stuff. Well, you saw some examples of trades. I want to go through the macro view, just go through this again very briefly. You know, if it all boils down to knowing the top of the top-down analysis, and that's what the crossbox does. It sets the agenda for the day. It also sets our position sizing. The current view, the DMS, knowing where the bonds and the notes, along with the S&P, the ES, is how they're behaving, is really going to set the environment, and it should tell you where to look. Of late, it's not been easy, simply because of the push-pull that we've seen between these geopolitical events and now to economic issues that we have here in the U.S. But it affects the whole world. So there's been this push and pull with the dollar, interest rate sensitive vehicles, and as soon as there's some clarity, things are going to get back to a norm in terms of correlations. But one thing is for certain, the RQTech is going to identify the leaders and the laggards, and we know what that is now in the RQ Crossbox. It's no longer referred to as leaders and laggards, but the leaders are called the breakout or break-up list and the breakdown list. It's the list of candidates that you should be looking at first on the long side and candidates that you should be looking at first for the short side. So that's taking us to a different focus. The next stream, when we look at it, helps us create a focus unlike what we've experienced in the past. We know that the Navigator is a quick alert type of system that tells you that the longer-term charts, the 30-minute chart with the RQ channel 2 and, well, the RQ channel 7 has been broken. That in itself is the most robust breakout, but they don't come very often. As you saw in the YM, that YM trade was based on a 30-minute Navigator trade. Alongside of that chart, there was a 5-minute chart. And you could see that had you taken the 5-minute chart, you would have been in a little earlier and certainly at a little bit better price. Well, that will happen with Navigator when you're matching up the 5-minute, because sometimes you'll see price action rise above the 5-minute RQ channel before it gets through the 30-minute. Well, those of us that want to be a little bit more conservative and see a little bit more evidence of the acceleration of in that case, the bullish momentum in the YM, are going to wait and see the setup on the 30-minute and want to take the setup in the 30-minute if they're willing to give up 5 or 10 points or $25 to $50. Because if that 30-minute Navigator is broken, it certainly is already increasing the odds of continuation or an acceleration of that momentum. So trading ranges are what we're looking for, but we're looking for the break with the Navigator. Now risk with this is where the game has changed with the RQTech. RQTech can tell you where the risk is, or the DMS can tell you where the risk is, where the money is flowing, risk on or risk off. It can tell you where the potential is, and it can also, the DMS can tell you where the, not the DMS, but the macro technical RQ crossbox will tell you how big you should go if everything matches up. If the macro and the micro technicals are matching up, you then want to add to your leverage. If they don't match up, it doesn't mean you have to pass on the trade. It just means you got to ratchet down your leverage. But here's the game changer. Did you ever stop and think, and I know that there's a number of you that are here that truly understand this. I think all of you do if you have RQTech, and if you don't, you need to take a trial in any event, is what RQTech has saved you by not putting on a trade. When you should stay out. Ask yourself that question. Because really, all professional traders are trained to ask themselves Why shouldn't I do this trade first? They go through the process of elimination and the filtration, just like us quants, distilling into the very best decision. And maybe the very best decision is asking yourself, should I stay out? Well, what happens is if you've got a green accelerator, a green 5, that's showing a qualified 2.0 or better, but momentum is not at that point on the side of upside price action, then what might happen is you could be stepping in front of a train, or you may be stuck in that trade longer than you wanted to because there was a transition from bullish momentum to mixed. Maybe the 1 hour's green, but the 3 hours turned neutral. The 8 hour is green. The 5 looks delicious, but that 3 hour is unchanged. There's got to be a reason that it's unchanged. Well, maybe it was pulling back off of some highs it had made earlier, but it was pulling back for a reason. We don't know what the reason is. We know who's in control, but we don't know the reason. But one thing we can see is that the momentum is not at its aggressive accumulation. It's in some accumulation, but it's pulling back. Now, does that green 5 look so handsome? Does the red 5 look handsome if you've got a couple red settings, but one setting is green? Or does it look beautiful when you're seeing a breakout or a Gnostic 5 on an RQ channel or Gnostic trade that everything is red or everything is green, and you know that's a sign of aggressive distribution or accumulation? That in itself is the game changer. When you can say, nah, where's the risk? When should I stay out? Or where is the potential? And if I see the potential, you already know how big you should go, because the macro view, the RQ crossbox, already defined your position sizing for you. There is no other system, and we know this, and we're not a big marketing engine, as everybody knows, but the word's getting out, and that word is now coming back, and Joe is listening carefully, because we've been hearing some fantastic comments. We like what we're hearing. We're getting great kudos from the public and people that are joining us. Not everybody's going to join us. We don't expect it. This isn't qualified for everybody, and some people aren't qualified for this. But those of you that feel that you're qualified, and you all do, know one thing, that when you've come in touch with the RQ Tech, that it helps you focus. If it does nothing but to help you focus on when is a prime opportunity that fits all of the rules, or it doesn't fit all the rules. What this is going to do is, first, it takes the complex and makes it simple, because you're looking for all 3 time frames, either aggressively bullish or aggressively bearish. It takes away having to chart surf. I can tell you right now, I don't even bother filling my second screen up with charts anymore, because I'll just watch the candidates that I know are relating to the DMS, if they are in correlation, and then I focus on the changes in the 3 hours. Now, of course, when I see the candidates, I lay them, and everybody knows I have a dashboard that I have, but my dashboard is almost everything that I need in one screen. Yes, if I have 2 or 3 more candidates, I park them on the other screen. The RQ Tech forces you to get simple if you truly understand what RQ Tech is doing for you. And I think we all do by now. And it helps us focus where it needs to be, and that is where the aggressive distribution or the aggressive accumulation is, and then find the best candidates when you notice where that aggressive distribution or accumulation is, and look for the setup. Look for the RQ channel or look for the Gnostic. And if they're not there, you move on. It will help the focus unlike any other instrument that I, in 30 years, have been in touch with. It was a mind blower when I first saw it. I knew it existed years ago, but I didn't know that Joe was quietly building it for NinjaTrader or having it coded for NinjaTrader. When I heard about it, I got thrilled. It was great. So RQTech, to kind of wrap it in this way, RQTech aligns to the RQ trading methodology, RiosQuant trading methodology. It delivers all the information necessary to identify the high probability of trading opportunities or necessary to identify what isn't a high probability in the form of a Gnostic or RQ channel trade. You know, what appears may not truly mean that it will take place. Now you have something almost like an MRI, looking at the market deeper, looking at the momentum deeper. So it enables us to identify the opportunities. And I will tell you that 30-minute time frame, if you're not using that navigator setting in RQTech, you need to. Especially if you're seeing a 0, meaning it's range bound, and then you see the market sitting in between the bull bear, which are the mid levels, which would be the trade zone and the next in one of those columns that you have, or you see it between R1A and 1B, or S1A and 1B. I always look for that. I look for a 1, and then I start looking for where the market is range bound in between the resistance bands, the support bands, or in between the mid levels. That's telling me that the market has been consolidating. I don't need 5 charts to recognize that. I just look for that little pattern in RQTech. And that's what helps me just refocus or circulate my focus to that specific instrument. And most importantly, and this is where the momentum is, it breaks the assets into their appropriate class. We can break that market analyzer into it. We want to see the appropriate classes so we can identify where the momentum is creating the leaders from the laggards. It doesn't matter whether we're going long with leaders or short with laggards, but we want to be able to see it clearly so we can focus but be patient. So you've spoken, we've listened. And this is the point where I have to tell you we've gotten a lot of feedback in the last year about the RQ channel, all very positive. Yeah, there's a few things that were glitches, and some people, you know, the DMS sometimes lags behind the market, and you see, typically you might see bonds and the bonds in the S&P really risk on, and maybe the DMS is lagging behind. That's because there's so much data, but that's why we recommend you keep an eye on the bonds in the S&P somewhere side by side or vertically near one another so you can personally identify the charts and what the trading environment is by the virtue of the charts, not by virtue of the visual aid in the DMS. So we've grown. RiosQuant has grown. The people that are in this room, and there's a sizable group of you, have helped us grow. And we want to let you know that we've listened, because Joe, you know, we had a PTR in June. We're going to have a PTR coming up in January. Joe gets all kinds of emails from members that know that they can reach out to myself, Ken, but also Joe. He will answer questions. He takes pride in answering those questions. So he's listened, and he's taken, you know, our feedback, Ken and ours, because he knows that we're on the front line with you guys, training. So if you're a current subscriber, or you're currently using RQTech for the first time, please contact us for more information. But here's an opportunity to gain equity for the amount of time, and we'll be talking about that. You've had RQTech, you've had it bundled into packages, or you've paid an annual subscription. We're going to give you an opportunity to use that as equity to a one-time ownership. Or you can continue. You won't be forced into any changes. So with that, I guess maybe I got a comment from an individual that I'm heavy selling. I'm going to address it that way, this way. You haven't met anybody with as much passion as I have, and I know Joe 12 years. And quite frankly, I know all of us use this. Help me help you help yourself, and I can then pass it on to Joe. Ken and I will be more than happy to help any one of you get to know how the equity program in the license works. And yes, there is a part of me that wants to convince all of you to take the proposition value that we'd be more than happy to speak to you about. So with that, contact any one of us. Please contact me, Ken, Amber.
And we are back, and that is a wrap. Thank you for visiting, and we will see you on the flip side.